Hi, Warriors. Welcome to another week on F.A.C.E. How's everyone doing today? Alexander, Sinatra, hiya, Bran, Ryan, AJ, Jordan. Everyone doing okay? Who's ready to have a good week?
Me.
You are? Okay. Every week you guys are?
I'll
okay.
take one.
Everyone would be okay with a good week. So, Brian, yen's pushing to new recovery highs for this leg. You have anything above it to interrupt this rally?
Yeah, it's really got to go. You've got to look left at the traffic area around the. You might want a 4-hour or daily. The traffic area where we were up at the 152s. You've just got some highs there. After that, after we topped out at 152, the first one's around 148 80s, and then you've got that secondary one just a bit above that. Got to go back even further if you want some other resistance, but let's take that for the moment.
Okay.
But it's on the grind. It's on the grind.
I'm wondering what Ryan, do you know the DSI in the yen and bonds? You know, since they're related, I'm sure there aren't you know, a lot of bears in US dollar yen.
I don't off the top of my head. That's something
Blake,
that Blake looks at.
Okay, Blake, you got that?
Wait, I'm sorry. I'm sorry, I missed your question. I was just reading one other thing. Go ahead.
Okay.
I've got it. Yen is at
Okay.
10.
And is it 10?
Yeah, 10 on its way to minus 25.
Okay. And how about bonds?
T-bonds 18, T-notes 18.
Okay.
Vol index
Right.
12. I mean,
What was 12?
the vol index, volatility index.
Oh, okay. Well, that's on the verge of breaking out of an area right here. So, you know, we had that turn last week, and we're threatening this line right here.
Yeah, very rarely do I use the DSI alone to get me out of something, or you know, to take profits. But I actually ended up using it today for Euro Swiss because the dollar Swiss DSI has just been so extreme for a while, and the dollar Swiss is up against resistance. So I actually used it this morning to trigger a trade. So
okay, all right, and the dollar hasn't yet, but on the verge of pushing new highs. So there's all kinds of divergences in the dollar up here. Mark Chandler said one more wash in euro starting to happen here. So doesn't it feel like to you guys, I mean, you look at this decline we had in euro, daily, you know, there really hasn't been any kind of fib correction all the way down. At the most, maybe, you know, 38 or 38, really only a couple of, this was a nice fade day. This was a nice fade day. This was hard to know it was a fade on that close, but, and then another one, every rally failing. Don't you think we're getting close to where we're due for, like, you know, at least some kind of bounce to 108 or so? Well,
that low 106, you know, 10-15, that's right on the fib level, 38.2 of the the September swing up from last year.
It's the entire move from I mean, it's the entire move from below the lows there.
I see it.
Yeah,
so
you're right.
And then 50% is all the way down at 104. And
I have to imagine most of the long-term, like, you know, euro bulls, they just don't think that we're going to get back below 105. So, you know, you start trading below 106, you know, about below that fib level that Ryan, you're talking about, that we've highlighted quite a bit. You start getting below that, I think it starts, you know, really freaking out some longer term traders, position, you know, institutions, whatnot.
I was just thinking the yen up here with the disappointment of people that were trying to top pick it last week. The BOJ, as we said, that they're the talking heads, same as it ever was. Coincidentally, there's been a lot of big pieces on the talking heads on the media I think they even made a play out of it, but that they're disappointed, they're gone. They're not trying it here. I'm trying it here. So I think that the, disappointment of the BOJ, maybe the Fed's going to come in and help out the BOJ. And we have an intervention, but not just, last time it was the BOJ alone, although before they did it, the Fed gave a verbal wink nod that, kind of hinted that we were almost done tightening. Remember that when we were up there at 152? Well, I remember it was on a Friday, and
it was the CPI, I think, that turned.
No, that was later, right?
After.
Yeah.
After, but that's what gave the BOJ the help as well.
Okay, so they started getting the numbers they wanted up here.
The Fed did, yeah.
But they were intervening from, down here. It was successful. So it's not like, not permanently, but for a while. I mean, if the BOJ traded it, they should have made money. Maybe they're going to try it again, and maybe this time the Fed helps them out so they don't have to. Maybe the Fed doesn't want them to, let go of their yield control either, because of the disruptions it would cause in the bond market. And
150 is the new 145 intervention level, and look how that didn't do anything.
Yeah. Okay, well, I think a lot's going to have to do with yields, and I know, well, DSI is 18, but you look at the 10-year, we're not confirming on the weekly. We're going to diverge at new highs on the 4-hour, so we're not far away. So I think the contrarian trades that might be setting up would be some kind of peak in yields. And the only reason I say it doesn't mean that, it won't happen, but look at what the 10-year did. And then you look at what TLT did, and they surpassed the October highs by plenty, right? I mean, decisively. And then here's TLT. Hasn't done it yet. Not far away from it, 89.27, but hasn't done it yet. So, I think that's a little bit of a tell that, the move up in yields is due for some type of surprise the other way. We'll see, but I'm attempting the end 80 pip stop, see what happens here. Gold, silver had a good week last week. So I don't know what to do with the metals.
We have to wait the end of the week.
What's happening then?
Well, I mean, it's end of month, end of quarter.
Oh, yeah.
And
okay.
We know that not only for the metals, we know that US Treasury has upped its bond issuance pretty dramatically in the third quarter. We have another week of issuances this week, and we are end of the month, end of quarter, and I've got a bit of a view on this thing, and I'm not excluding, or I think we may see it actually a rush in the dollar towards the end of the week or this week, with new highs on the yields, and then we'll have to see exactly what happens start of the next quarter. And we should be hearing from the Treasury how they want to whether they're
requirements,
whether they're well funded now or whether they still have some. And then you have the shutdown, of course, but that's I don't know if we can really trade that right now. But I think this week is going to be very interesting. Well, end of and start of next week.
Yeah, so Blake, do you know for sure, was it sell on Rosh Hashanah, buy on Yom Kippur? Because today's Yom Kippur.
Yeah, it's supposed to be covered today.
Okay.
I mean,
all right, because I mean, we're getting close to where we could get a bounce, but don't get fooled by the bounce. Look at this chart. Okay, so I mean, we went all the way to 50-day moving averages. We broke them on the daily on Amazon. So here's my headline. The Magnificent Seven. Many are already on Boot Hill. You like it?
What's Boot Hill?
Oh my God. Didn't you watch Westerns? That was a graveyard.
Yeah, but I was pretty young. I mean,
anyway,
unless
Hill.
it was like you know,
they didn't use that term in the military.
No.
Boot Hill. All right. Anyway,
No.
that's Western. In the Western days, it was Boot Hill, and the Magnificent Seven is, you know, this is one of them. This is another one of them. This is another one of them. NVIDIA is another one of them. So at least half of the gunfighters look like they took some hits. So I don't think no one's talking about the Magnificent Seven anymore.
Well, they do look they look a little vulnerable. I have to say though, Dale, we closed the week at our lows, and yeah, I know I talked about it during the week ahead video, but it's important. If you look at the weekly candle on the S&P, that is you're not going to find very many bearish candles that look like that. And that's a Marabuzo candle, which is going to be a one that you're going to look for follow through sometime this week. It doesn't mean that we have to sell off today. We could get a bounce today. I mean, you get we like to call it Mutual Fund Monday. You get some money coming into the markets today, and markets get propped up a little bit, and then you get turnaround Tuesday, and you get people selling right into strength. I mean, you got a lot of weakness, and you just pulled up a bunch of charts just from the Super 7 that are, or Magnificent 7, whatever you want to call them, that are looking.
I didn't give them that name.
What's that?
I just thought I didn't come up with that name. That's
no, people have
CNBC.
People have all these different names for them. It doesn't really matter. It's just
MAGA, FANG, the leaders.
Yeah, you just got some of that the leadership stocks that look really pressured. Then you start looking at the Russell 2000, the Nasdaq, the Dow. I mean, everything looks vulnerable. You've got the German DAX that is literally threatening a big breakdown right now. So you got a lot of different markets that look gross, and then on top of that, you got copper that's weak. And then you have crude oil that continues to be strong. I mean, those are things that are, both of them are negative for growth.
What would happen if crude rolled over? I mean, it's been one of the positive sectors in the market.
But that's not what's affecting it. And this is the conversation we've had, like, literally for the last 2 months. The rally in crude is going to hit risk, not complement risk. And that's where people get they think, crude going down, that's stocks are going down, demand is down. No, this is a supply issue, and the lack of supply is making prices go up, which is feeding into inflation, which is going to feed into all central banks keeping their rates higher for longer. And that's not what the market needs or wants. So,
good, because it's topping out.
Well, I'd hope it'd be nice to see crude top, but I don't know. I think crude looks like I still think it's going to $95. That's
yeah, okay.
Well, it's just like the technical pattern says that, and as long as it's above 80, 85 or $88, there's no reason to think it's bearish at this point. So, just looks like a bullish consolidation.
Mm-hmm.
But yeah, it's anyway. Hey, let me ask you this, Dale. Just since we're sitting here chit-chatting a little bit, government shutdown. We got to the end of the week. What do you think?
Well, it's not a black swan.
McCarthy's just got to push something through. But
all right, here's what I think. If we don't have one, sell the rip. And if we have one, continuation of the move. I think the market could actually rally in hope of one. So from about the 4,300 level, 4,290, we're not there yet, and in hope that we don't have one. But to me, that would just be a rally to sell at 4,400 if we had a pop, because that was resolved. Because this is, I know it's a big deal, but even I think we're going to have a growth scare, and that's why I'm looking at short yen, possible highs in yields, and a continuation of a bear market with intermittent rallies in the stock indexes. And I don't think it stops till the stock indexes approach the March lows. The March levels in indexes was about 3,800. So, 38, 3,900. In fact, I think every chart I have on my screen has either gotten to the March levels, some are under, like the silver miners, but I think almost everything's going to retrace to where it was in March. And the dollar's almost there against some of the currencies. But yeah, so I think that down is across the board is going to happen. And for the next, I don't know, for the next couple quarters, I think we're going to have real nasty action. But
so basically what you're saying is sell rallies and government's going to shut down or not shut down. We're not really too sure.
Yeah. The market's peaked, whatever happens with the government shutdown.
Well, just just showing you guys some of these charts that again that don't look great. Here, here's the NASDAQ 100. A lot of people were thinking, oh, here we're going to go to all-time highs. And it's like, no, this is a long-term topping process. And that's why, we're, creating a, this in this example is going to be a triangle in the S&P. Here's the
bulls are going to be buying this break, Blake. I think the key thing is they're going to come in when this part of the decline is over. I think they come in, around that 3,900 level. This week, they'll come in around the 43, but they're going to come in and call this just a pullback, healthy, a pause that refreshes. And, they have some good technical arguments to say this is a buying opportunity, but lower, right?
Yeah, I mean, I would say anything down at 3,800 is a great buy. Just kidding. Well, actually, I'm not, but that's a long term away, and that's not something we're going to see this week, nor any time here in the very near future. But I just think you got to just look around and say the markets look vulnerable. You got VIX that we get above 20, and VIX is going to take off. You got copper, and this is what I was talking about a little bit earlier. Copper is below triangle support. Well, you can look at the copper. The HG, this is the actual contract. I mean, we're sitting really on support. I mean, hell, and again, this is the bullish look in crude. I mean, crude's bull flag pattern still moves higher, or points higher. It takes us to about the mid 90s. So everything still looks constructive there. But here's the DAX. I guess I should probably just show you the DAX as well. The DAX looks pretty vulnerable as we're now below the 200-day moving average. This is the support zone. This is only a 24% retracement, but as we've mentioned here, but I'd say it on the week ahead video pretty much every week, is you hit a new high, an all-time high in reverse. That's an all-time high. Suckered a lot of longs in, and then as soon as you do that, you hit all-time highs in reverse, and you have a false breakout at all-time highs. That's usually a pretty negative sign. So we are at the 24% retracement. 38% retracement takes us all the way down to 14,700, which seems like our next leg lower now that we're below the 200-day moving average. Anyway, equity markets don't look great is the point I'm trying to make here. And if we continue to sell off, think about what the ramifications are in the rest of the market. So with that being said, Ryan, you've had a lot of time to be awake, look around. Tell us what you saw, anything overnight that really really got your attention in European trade? And then also, what are you looking at? What's your one trade idea that you're thinking about this week?
Oh, talk about puts on the spot.
Yeah, well, you know, it's Monday morning. Why the hell not?
There wasn't that much out overnight. I mean, UEDA was out with some comments, and you know, fairly dovish, non-committal, saying they didn't have an idea of what the image looked like for the next YCC change and 10-year JGB target. So a load of easing guff from them helped with yen weaken a bit more. For me this week, we've got a lot of consumer-related data, and that's going to be important this week after all the central banks, particularly after the Fed, because it's going to be the consumer that decides soft landing, hard landings, or whatever. So we got US consumer confidence tomorrow. That's going to be the play I'm looking at. Month end, quarter end coming in as well. As for trades, you got to keep an eye on euro dollar. It's been noted in the room as well. We're not bouncing. It's sort of similar price action to when we came down to 107, where it didn't really bounce much off of there.
Yeah,
Kept the pressure on. I think it could be a more significant break if this one goes. Apart from that, I'm just managing my positions: euro sterling long, dollar yen long, dollar China shorts, and seeing what else I can snipe from the markets.
All right. Well, thank you for that update. Kman, what do you what anything that grabbed your attention? I know you were on the Flow Show with Ryan. And by the way, if you guys are not listening to these two guys in the morning, well, in the European morning, make sure you guys log in here at the Flow Show. But Kman, what are you thinking right now? Anything? And what's a big trade for you this week that you're thinking?
That's what I said at the start of the show, and what I already said last Friday in the room as well. To me, this is possibly is it the last one? I don't know, but at least the final one for the quarter, rushing to the dollar, and then there's a risk. That's my view. I think we're going to print those fresh highs, 455, 463 to watch on the 10s as well in the dollar yields. Sterling and dollar differentials are widening, so the cable is looking still very weak. I'm a bit short of that one. Got my call in the dollar yen, which I'm going to start to hedge pretty soon. But I can see this last rush, well, last with a question mark, rush into the dollar this week, and then maybe in danger for a deeper or a bigger correction. Let's put it that way.
Okay, well let's say I'm right, and Dale is too. We're looking at U.S. equities, and U.S. equities continue to bleed lower. And let's just say the S&P, you know, we're at 4,300. We trade down to 4,200 or the 200-day moving average, which seems like the logical stop for me. That's 100 points away. Between now and the end of the week, just, you know, doing some, you know, quick, you know, analysis here. If the S&Ps continue to drop, would you be a seller of dollars if that's happening, or do you think the dollar is going to catch even more of a bid if equities come under pressure?
In the process, it's probably going to be accompanied with higher yields, and then I continue to be long dollars. And once we get there, if that's the end of the week, then I'm really going to start to think to take the other side in dollars.
Okay. Yeah, and yeah, it's gonna. I want to just share with everybody so you can all see the equity markets here in the S&P, you know, coming out of a triangle. The 200-day moving average also is channel support. If you guys don't see this very light blue line, that's channel support's going to intersect right with the 200-day moving average. That has really capped us on the upside as well. You can see this is a channel resistance. So, you know, this is going to be closely watched on the way down, I think, because, you know, you're going to have everybody so bearish with the head and shoulder patterns and, you know, the triangle targets. It's going to surpass the 200-day moving average, but I would venture
break it.
Yeah, well, you know, there's gonna be this is gonna be a bounce area.
Yeah,
Whether
battle
it'll break
zone.
or not, it's like that battering ram, right? It might take a couple of shots at it, but you know, if you're thinking about what Kman just said, hey, we might make one more you know, break higher in the dollar, especially getting past the 38% retracement, maybe trading back up to 107, 107 and a quarter. That may coincide with the equity market weakness. One of the things that you know, I did talk about on the week ahead video is that you know, we do have to watch for a potential government shutdown, and maybe that is the catalyst that drives the dollar higher, because you know, people think that you know, I'm gonna, you know, if the government's shutting down, you know, last place I'd want to be is the dollar. But remember, they're probably going to be selling treasuries. So if they're selling treasuries and yields are rallying, the dollar's probably going to catch a bid as a result. And, you know, people are going to say, no, just put me back in cash. So that's something else. Okay. Well, today it is today is I'm
Yom
sorry,
Kippur?
Yom Kippur that's today. And so maybe there is going to be some buying coming in, Dale. So
After, yeah, right. After all the Jews come out of synagogue, they call their broker.
no, it's just, but from a seasonality standpoint, you know, that this is a trade that a lot of people are looking at, and it'll be interesting to see if the equity markets might gain a foothold today. Well, you know, for me, I think we're going to have to be watching headlines this week. And that's, you know, something that I think is going to be, you know, a risk for the markets, is just watching, you know, these headlines. We have PCE at the end of the week. That's going to be pretty important. A couple other pieces of data that are coming out. Like, you know, Ryan said, we have consumer confidence. That's going to be tomorrow. I do think that the you know, final GDP or the GDP numbers that come out, I think we have them coming out of Canada. We have them coming out of the US. Is there somewhere else that GDP was coming out? I could have sworn it was somewhere else too. So a few pieces of data that might move the markets this week. Hey, Ryan, Kman, you guys are looking at the dollar yen. Just really quick, just since it is hitting highs on the session, you know, do you think we can make a move for 150 this week?
Definitely.
Yep.
Yeah, it looks like it, doesn't it?
Probably be more of a surprise if we don't.
Yeah, I mean, you know, it just seems like we're just grinding up there. Is there anything that you guys are looking at with the yen pairs? I was just reading a city piece on the sterling yen, which is, you know, sitting on support. I would say looking a little bit, you know, vulnerable. But what are is there any other yen pairs that you guys are looking at that look good?
No, just the commodity yen sphere is still very big.
Yeah, this CAD
Euro yen is defying the laws of gravity. For the rest, I'm not even looking at sterling yen, because I've got the same view in both currencies. That is for a bit weaker. But you know, you can never exclude interventions, because today even PM Kishida was talking about the yen being weak. So we can never exclude anything. But all else equal, it's got 150 written all over it, right? And if they don't do anything, especially after Ueda still being himself confused apparently as to when he needs to continue normalizing. So yeah.
Hey, Kman, do you think if the Fed intervened with the BOJ, that with all the bonds that the Treasury has, they're going to announce, that would also help the U.S. sell their bonds off, because yields might drop on a break in U.S. dollar yen?
But why would the Fed now today intervene together with the Bank of Japan?
To get what?
That is my question. Why would they?
So that they could, and so it's easier for the US to sell bonds and yields begin to break.
Wow, that's supposing a lot. I find they can intervene to the Fed may get the request from the Bank of Japan to,
right.
Then they will intervene on behalf of, same as the ECB, same as the
Right.
BIS, for instance. But I'm not sure if the Fed does really want to start to sell dollars. That's going to need a new Plaza Accord, right? If they want to sell dollars themselves, and then it's
just against the yen, even just against the yen, not against the euro or anything.
I've never seen them do it, Dale. I've never seen them do it.
All right.
Going just with one other central bank, I don't think that I've ever seen it, and that's a strange one. And let's face it, Yellen has given the green light to the Japanese to intervene. Much more to the Japanese than to the Swiss, by the way. But so the Fed could help the Bank of Japan, but it's going to be on behalf of the Bank of Japan.
I got you.
Yeah, I don't see it happen, man. No.
Okay.
Unless we go to $160, $170 yen, euro dollar goes to parity and below, stuff like that. Then we can have a new accord, and if it goes paired as well with US 10s hitting 5%, for instance, then I think we are in a different situation. But I don't know. I don't see that happen. They would rather step in and buy bonds.
Got it. Okay. Crazy idea.
Yeah, and just a couple other, just really quick, and Dale, I know you have your interview right now.
Actually,
so
Steve had to reschedule because of the holiday.
Oh, okay. All right. Well, there we go. Well, then I just want to point out really quick, these last two big moves lower, well, big relatively in the yen move. These last two moves lower, the 161% extension of both of them come in right around 149.20, roughly. And it's a confluence between both of them, both 161% extensions. So that would be my initial first thought, and we're only 60 pips away right now, 50, 60 pips away. So that it seems like we'll probably trade up there to there in Asia. And then the Gartley or butterfly pattern, 161% extension goes just past 150. So it seems like those two levels between here and here, it seems like that's a pretty logical landing zone, at least near term. And obviously we could always go higher than that too. So but guys, I want to say thanks for being here. It's Monday. I expected it to be a little quiet, but I think we need to be looking at the remainder of the week. There's going to be a lot of data coming out, kicking off tomorrow with consumer confidence. We got a lot of housing data coming out here in the US. And then also keep in mind there's going to be a lot of headlines about government shutdown, potential government shutdown all week. That's probably gonna that could move the markets as those headlines come out. But I want to say happy Monday to you all. I hope you guys are having have a great week. We'll be here every day. Make sure you're catching the Flow Show in the morning with Ryan and Kman, or in the European morning. And Dale, I think we can wrap it up here.
Okay, and everyone be here tomorrow because Lakshman Akiten will be with us from At Business Cycle. And I learn a lot. He's been talking hard landing and hasn't changed his tune for a while. So this might be a good time to tune in and see if he's going to, still believes in it and if he's getting any evidence of it.
Yeah, Lakshman's
we're not
great.
seeing it. Yeah. He's, I remember him from 20 years ago. He didn't age, but his he really provides a unique view of where business cycles are going, not where they are. So I'll see you guys tomorrow for that. And don't just count your pips, count your blessings. Kman, thanks for listening to one of my crazy theories.
No,
again.
absolutely.
And,
Yeah,
and,
no, I mean, nothing is crazy enough in this market, Dale, you know, and
Yeah.
there's always a first for everything.
Well, I am crazy because of, you know, what the market's done to me. And, you know, I'm trying to recover. And I've talked to shrinks all the time about how the market has warped my, you know, my mind. But everyone out there, we're going to keep you on the right side of things, or do the best we can. So keep an open mind. You'll keep your account open, and we'll see you tomorrow for Turnaround Tuesday when all the money's back, and you know, we get the other element of the market back in here. It's going to be a great week to trade.
It
All right,
is.
guys.
Thanks, Dale.
All right.
Thanks,
See you
Kman.
guys.
Thanks, Ryan.
Thank you,
Cheers.
team. Adios, guys. Thanks, Ryan. Thanks, Kman.